Good afternoon, everybody. It's 2:15. Apologies for those watching online or waiting on the Zoom link. The meeting before ran on, and so we had to set up the room and everything else before we could start on this afternoon's meeting. So this is a meeting of the Audit and Accounts Committee at Newshire Hall. Welcome to everybody who is watching. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place. Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There's no fire alarm test scheduled for today, so if the alarm sounds, please leave by the nearest marked exit, which is behind you, hurry through that door and assemble in the car park. Now, I think it would be helpful if we could just quickly run round the table so that everyone here knows who everybody is. Chris, do you want to start?
Chris Bowden, County Councillor for Whittlesea North. Sorry, Chair. Stephen Moyer, Chief Executive.
I've spent 4 hours looking at you. I'm quite happy where I am. Thank you very much. David Ambrose Smith, Councillor for Littleport.
Michelle Rowe, Democratic Services Manager.
Nick Gay, Councillor for Market District in Cambridge and Vice Chair.
Graham Wilson, I'm the Chair of the committee and Councillor for Commonwealth Huntingdon South.
Michael Hudson, Executive Director for Finance and Resources and the Section 151 Officer.
Jeff Zeeve, Councillor for St Neots, the Edens.
Councillor Henry Batchelor, Member for Linton and a substitute on the committee.
Mairead Claydon, Head of Internal Audit and Risk Management.
Sarah Brown, Audit Partner, KPMG.
Harry Fosco, Audit Manager, KPMG.
Thank you. And Mohammed, we can see you, so do you want to say who you are?
Yeah, Mohammed Hussain, co-opted member of the Audit Committee.
And then I think there are two others on Zoom. Emma?
Good afternoon, members. Emma Duncan, Service Director, Legal and Governance.
With a very attractive orchid in your background. And Jacob, are you there from EY?
I am. Good afternoon. Jacob McHugh, Senior Manager with EY from External Audit.
Thanks very much, everybody. So that's everybody present. Michelle, do you want to just tell us the apologies we've got?
Thank you, Chair. Yes, I've had apologies from Councillor Whelan and Councillor Batchelor is substituting, and apologies from Councillor Sharp.
Thank you. Do we have any disclosable pecuniary interests or non-statutory disclosable interest members? No? Okay, thank you. Members, we're being asked to approve the minutes of the last meeting on the 30th of July 2024 as an accurate record. If any committee member wants to raise a question on the accuracy of the minutes only, can they do so now? No comments on that, so I see no objections, so we'll take that as carried unanimously and I'll sign them later. The action log we are asked to note the action log. Are there any comments on the actions, Jeff?
Thank you, Chair. I just certainly don't want to take up too much time on this one. It actually relates to the minutes and a question really as to why something is not on the action log. It's minute 182. It concerns the deep dive into the Section 106 monies, which was being looked at and should have been reported to Strategy and Resources, maybe the previous meeting. But my question really is, why is it not on our action log as well? Or at least, why can we not see this report in this committee?
Michael.
Yeah, through you, Chair. I think the issue was that it was on the previous action log. The action log was to report that through the integrated finance monitoring report as was. And there was an internal audit review carried out on this and reported through this committee. So I think that's why we've not seen the action in terms of that, because I think it was closed from the previous action.
I think we've know that certain systemic changes have been initiated, but there was to be a deep dive which would look at the situation on collections of Section 106 over a number of projects, and that we've not seen at all. So I just wonder whether that's been reported, whether that investigation is completed, and whether, even if it has gone to Strategy and Resources, we as the Audit Committee should see the outcome.
Yeah, through you, Chair. It is electronic page 111 of the pack. Oh, actually, it's the same page number. There is an update within that in terms of the internal audit review, which I would refer to as the deep dive, as it were. And there were a number of actions coming out of that, one of which was to establish a Section 106 board, and that has set up and started. So I think that's the stage in terms of progress, so that deep dive and the actions flowing from it have actually taken place.
I think the question that Jeff was getting at was, are we going to get answers to the earlier questions about Section 106 funding and any missing monies that might be available from developers? And I also highlighted that for this particular action, the revised target date is to be confirmed. It's not there yet.
Chair, through you, I recommend that the best way to take this forward is to note recommend an action for the next committee in terms of to receive an update from the board in terms of progress, in terms of responding to the audit recommendations.
Okay, let's go with that, Jeff. All right, any other comments on the action log? No. From the far corner of the earth? No, he's busy. Sorry. You haven't got to look at me anymore. Oh, that's what it is, Chris. Thank you very much. All right, thank you very much. So we've noted the action log. We've received no petitions or public questions. So the next item is item 4, the review of the Audit and Accounts Committee terms of reference. And can I ask Mairead Claydon, Head of Internal Audit and Risk Management, to introduce the report, please?
Thank you, Chair. So this presents an updated terms of reference for this committee, which has been reviewed and refreshed in line with the discussions held during the committee's review of effectiveness last year and the SIPFA position statement. There are 2 copies of the revised terms of reference appended to this report. Annex A shows the proposed changes from the previous version, and Annex B is a clean copy of the updated terms of reference. The key changes involved, firstly, deleting some sections to reduce duplication and repetition and ensure that the terms of reference is a focused summary of responsibilities for the committee. And then secondly, in order to reflect the SIPFA position statement on audit committees in local authorities and the police, the expectation that committee members commit to being present for all meetings and avoid the use of substitutes as far as possible has been added. That was a specific action which came out from the previous review of effectiveness undertaken by the committee. The report notes a proposal that any more significant changes to the terms of reference will be deferred to the financial year 2025 to 26 to take account of the upcoming elections and the new global internal audit standards. And just to note as well that if the amendments are agreed by this committee, they will then be taken to Constitution and Ethics Committee before submission to full council. Thank you.
Thank you, Mairead. And I think these are very helpful changes, and it does emphasise our roles. So any comments, questions from Mairead? Nick?
Yes, in the governance regulatory framework section, that's on page 29. Point 1 is proposed to be deleted, and I'm slightly surprised about that. That's to maintain an overview of the council's constitution in respect of contract procedure rules, financial regulations, codes of conduct, etc. Because at our discussions about the role of the committee recently, we have been suggesting there should be more interaction between this committee and Constitution and Ethics Committee. So I wonder if you could just comment on that.
Let's see if we can get 2 or 3 questions together. Any others? Jeff?
Thank you. Yes, delighted to see the sentence included that the committee has a right of access to and constructive engagement with. I think it's on the top of Annex A. I'm sorry, I haven't got the page, but I think you will know the sentence I'm talking about. My question here really is, and this is maybe something that will turn up a bit later, during the course of casework or talking to colleagues, a couple of issues have arisen which could be usefully investigated. And I just wonder what the right process is for a member of the committee to raise them. Now, clearly we can come through you, Chairman, and you can put them on the agenda. I can't raise them directly because they do concern specific projects or organisations. So, I mean, how in practice can we exercise that constructive engagement with other committees?
Okay. Mairead, do you want to just answer Nick's comment about why the reference to the Constitution has been taken out and where that is covered instead?
Thank you. So in respect of that removal from the governance regulatory framework, point I, that has been removed, sorry, because we felt that it was duplicated elsewhere. So firstly, in the same section, we have retained point VI to consider the arrangements for corporate governance and assurance across the council's full range of operations and collaborations with other entities, and to agree necessary actions to ensure compliance with best practice. So that gives a general overview across the entire corporate governance framework. And then there are points as well earlier on in the terms of reference around oversight of governance and internal control, which would similarly pick up things like contract procedure rules, finance regulations, codes of conduct, but also it was felt that potentially there is some overlap with that statement and the responsibilities of the Constitution and Ethics Committee. So in order to keep the focus of this committee around internal control and the focus of the Constitution and Ethics Committee around the sort of constitutional framework specifically, I felt that it was perhaps better to remove that and retain the other references made.
Are you happy with that? Yeah. Yep. And then Jeff's comment about approaching other service committees, and in particular raising what could be regarded as commercially sensitive matters.
So the committee as a whole can and previously has raised issues with other committees through an action that's agreed within a committee meeting itself. If there are issues which are commercially sensitive, I think it would be best probably in the first instance to raise those with officers so that we can understand exactly what the concerns are and then advise on the correct route, because I can imagine that that might vary slightly depending on which committee is affected or what the nature of the concern is.
Just how do I do it though? I mean, I've got a couple of instances and which I could obviously discuss with you and then you could discuss them with officers. My concern is that, of course, if it's an urgent matter or needs immediate attention, it can't really wait until the next committee meeting to give an instruction for the investigation.
So any member of the committee is welcome to contact me at any point, and that also goes for members outside of this committee. So please do feel free to get in touch with me directly, and then we can initiate that conversation. And if it's something that can't wait for the next committee meeting, then we'll agree how best to approach it.
Thank you, Chair. Very much in response to Councillor Seif's point, I think that we are a very collegiate committee and we're all interested to hear comments which are made by others, especially if they're novel or interesting ones. And my suggestion to Councillor Seif is that if the opportunity arises, and he's more than competent, I think, at doing this, he finds a way to hang his hat on something which is already on an agenda and then make the suggestion that the matter be referred back to the committee. And that's the way in which we could interject into a matter which is does relate to another committee, but nevertheless has audit and accounts implications. And if that needs to be done in confidential session, then so be it.
I think, Emma, have you got your hand up? If you got to, yes, you've got, Emma.
Yes, sorry about that. Just wanted to raise an issue in terms of the interaction between the Assets and Procurement Committee and also this Committee on Constitution and Ethics. So the Constitution and Ethics Committee have overall responsibility for the Constitution. We've now got the Assets and Procurement Committee that deals specifically with assets and procurement rules specifically in relation to the Council. Sorry about this. Just one moment, would you? Apologies about that, members. A little engagement from the puppy there. So we have clear remits for all those committees at the moment. Constitution and Ethics oversee the whole operation of the Council's standing orders and procedure rules, its terms of reference. So it gives that holistic view and specialises in that. Assets and Procurement have a very clear remit around making sure that procurement is being done effectively. In relation to this committee, obviously, if there are issues with our procurement rules, then this committee will be able to identify those from audit reports, from value for money assessments and things like that, and make recommendations to those committees to do some more work around them if that's felt appropriate in those circumstances. So whilst it won't be directly within the remit of the committee, it certainly will be part of the work that they do in terms of audit recommendations and making sure this element, these elements of our governance framework are fit for purpose. But the Constitution and Ethics Committee and the Assets and Procurement Committee will be doing the detailed work about procurement, but that's not to say that this committee won't ever consider those issues. It's an important part of their role and they'll continue to be involved in that. Thank you.
Thank you. Does that answer the questions, I think? The only comment I'd got is the risk management section, because that's in light blue highlight. Is that all new? And in that instance, I mean, it all makes sense, but I just think we should be aware that it is new.
Thank you, Chair. So that's not new. The highlight indicates that the wording is taken directly from the SIPFA position statement, so it exactly replicates
I should have
the
read
SIPFA
your
wording.
paper properly.
No problem.
Okay, well, that makes explain why it makes sense. Excellent. All right, I'm going to put you slightly on the spot here, Sarah or Harry. Do these terms of reference make sense to you? Are you comfortable that if we follow them, we'll be meeting the law and local good practice expectations?
Sorry, I was going to say, obviously, we've not checked them line by line against the code, but certainly they're very consistent with what we'd expect to see and the duties of the audit committee. We'd have no concerns.
Mohammed, I think you put your hand up.
I just had one question, kind of the risk management section. And I think the point is covered, but I wonder if it could be a little bit more explicit. And it's mainly around risk control culture. So things around engagement with the internal audit function when we're doing certain audits, the timeliness of action closure or acceptance of actions as issues. And making sure that the level of engagement throughout the audit is kind of good throughout relevant governance, etc. My concern is we could have audits where we have really good recommendations, but they don't get implemented or are risk accepted and things like that. So is there a way we could build in kind of a risk control culture around how kind of audit is seen in terms of overall governance and the value that it's adding?
Thank you. So I think a lot of the areas that you describe are within the audit activity section, which is page 28 on to 29. So that picks up things such as considering reports from internal audit on agreed recommendations not implemented, considering also the wider kind of risk culture across the organisation in terms of the response to external audit, but also right at the bottom of that section to support effective relationships between all providers of assurance, audits and inspections. So that would cover things like Ofsted, CQC and other sources of assurance that this committee can take, which should inform them on the risk control environment and the risk control culture that's in place across the organisation. So I think while there isn't an explicit statement to that effect, it is picked up within that audit activity section.
Sure, no, that's helpful. Is there any way that we could just from a general kind of committee point on kind of tracking that kind of engagement and scoring? There isn't any way we kind of mark that, right? It's more of a maybe that's in the audit opinion they give at the end of year that gives that view potentially, but there's no other way outside of that, outside the kind of annual opinion that gives us comfort of if we're deteriorating in that position, are we comfortable, or would that come to the audit committee's attention in terms of you guys raising it just when you feel there's a deterioration in that?
I think that is partly something for the committee to consider as a whole in its role. So taking into account all of those different sources of assurance which are put before the committee at each meeting, it is somewhat for members of this committee to consider, do they feel that the risk culture and control of risk is improving or deteriorating? As you've noted, my annual opinion does give an opinion on the management of risk within the wider control environment. And equally, the committee could consider, if they wished, to raise with internal audit if there's a desire to do a specific piece of work looking at culture. That's certainly something that we could look at as well.
Perfect. Thank you.
Thank you very much. Any other comments? No? Thank you. So we have reviewed, commented on and endorse the updated terms of reference for the committee, and we're happy that those are submitted to the Constitution and Ethics Committee and then on to full council. Yep. Thank you very much. When they go to Constitution and Ethics and full council, do they still go as an officer's report or? Yes, thank you. I see nods over here. Nods, 3 nods. I think that's unanimous. Right, thank you. We move on then to the next item, which is financial reporting and related matters. And can I ask Stephen Howarth, Head of Finance, to introduce the report, please? Stephen.
Thank you, Chair, and good afternoon. So this report updates the committee on the status of financial accounts and external audits for several financial years, in particular giving an update on progress of the ongoing 23-24 audit and seeking delegations to enable 22-23 statements to be finalised. So working backwards in time, for the 23-24 accounts, we're currently working with KPMG on the external audit. The paper gives the picture of that as of publication date, and there isn't really much more to add other than we're continuing to work through queries that are raised. There's still at least one large sample to come from KPMG, which will involve the whole of the finance team in responding to. while the audit is delayed from its original timetable, it's progressing well from our perspective, and relations between the council and the auditor from our perspective are quite productive. It's important to reiterate, though, that linked to the backstop on 22-23's audit, which I'll come to, we're not expecting a full unqualified opinion on these accounts due to limited assurance being available to the auditor on the opening balances. So on the 22-23 financial statements,
Stephen, you want to just hang
Sure.
on there, and we'll just do 1 year or one period at a time. Sarah, is there anything more that you want to add to the 23-24 audit?
The only thing I was going to add, other than to say completely agree, the audit is progressing well and exactly as we would expect it to be at this point in time. I was going to raise a point around the disclaimed opinion position, but that might be better later on because I know that's further in the paper.
So if we're talking about 23-24, I wonder if someone could explain to me, and it will be other years as well, I'm sure, what is the position on the value for money audit? Quite apart from the audit of accounts, I'm just uncertain. It doesn't seem to me, and I could be completely wrong, that disclaimers are going to apply to VFM. So having some confirmation on that would be really helpful.
Yes, I mean, EY might want to come in on that particular point. I'm not sure they're still here, but so you're exactly right. The backstop doesn't apply to VFM, so it will be required that EY complete their VFM assessments up to the period ending FY23. KPMG will then be undertaking the work in relation to the financial year 23-24. And so you should expect as a committee that VFM up to the end of FY24 is completely concluded by the backstop date of the end of February.
Thank you, Chair. I understood all of that until the very end. Is there any, the backstop date doesn't apply though to VFM, does it?
Yeah, well, the backstop date is the date that it's expected the work is concluded, financial statements and value for money.
Right, maybe I've misunderstood then. So VFM is subject to the backstop, and VFM will be just cut off at the backstop date for the relevant years for any VFM work.
It will. I guess the key difference is that for the financial statements audit, for any years preceding FY23-24, the backstop date applies, but it means that no audit work may be done. So the auditors have the ability to issue a disclaimed opinion, which may mean that they're essentially disclaiming everything. The same date applies for the VFM work to be concluded, but that can't be disclaimed. So you will be in a position by the end of February that you'll have received a conclusion over the value for money work that can't be disclaimed. It has to be a full risk assessment and a full assessment of the value for money arrangements with a formal conclusion.
I'm sorry to ask, it's genuine ignorance on my part here. I'm not trying to make a point. Correct me if I'm wrong, but part of the VFM does involve, for example, responding to objections from local electors asking for matters to be considered and whether certain items may have been unlawful or need to be reported in the public interest. Are we saying that any objections that there may be are similarly going to be, or any work on any objections is similarly going to be cut off at the backstop date for the relevant years?
Our understanding is that the objections will be concluded by that point, but Stephen might want to come in. I've not been party to the conversations with EY, obviously.
I think my understanding is that unless there is exceptional grounds, the expectation is that objections should be concluded. Of course, what exceptional grounds means is a matter. I know we've got Jacob here from EY, and I know we've started with 23-24, but I think the questioning is kind of driven from 22-23. So it might be something that we want to either return to as we come to 22-23, or we want to pick up now, but it will be a question for the auditors to assess whether they have sufficient information to then determine that Clearly what the backstop is looking at is the annual report, which pulls together a number of factors, including the VFM and the audit opinion. And then I believe for I've got to get my years right now, 25, 26, that will look to have the value for money concluded by, I think it's the 30th of November every year, henceforward from that, I think. But so I'm getting shakes from one side and none from the other. It's
No, 25, 26 is the deadline of 31st of January 27. It's the 26, 27 which goes to 30th of November.
Yes. So yes, it's getting very confusing with the multiple years now. But in terms of the objections, it will be for the auditors to comment on their ability to conclude on that. I'm led to believe that they're hopeful that they can, but that's probably more a comment for Jacob from EY feeding into then the KPMG audit for 23-24.
I think I might muddle this by encouraging you to stop, Stephen. You probably should have completed everything and then we should have started having questions. I'm conscious that Jeff wants to come in and we want to ask Jacob some other questions. Stephen, do you want to continue and then we'll work through the years again in turn?
I mean, if it's helpful, I can just touch on 22-23 just to wrap that up, or I can continue all the way through, Councillor Wilson. But so we've touched on some of the aspects of 2023, but for the avoidance of doubt, we are not expecting an audit to take place for 2023 by the backstop date, and therefore there will be a disclaimed opinion issued by EY. Certainly our understanding is we expect value for money opinion, and Jacob can potentially comment on the objection as well. I suppose just for committee's benefit, we expect that to be the situation for hundreds of authorities. But the main piece of business to wrap up for at this meeting is that we are, through this paper, asking for a delegation to be given to the chair and to the executive director of finance and resources to do the necessary work to finalise and sign off the financial statements for that year with the disclaimed opinion in, probably later this calendar year, with a report back to committee on that process. Would you like me to stop there?
Yeah, that's quite a convenient position, I think, to stop. Jacob, can we bring you in here as to what work you have done? We haven't published anything because your draft report came in too late for publishing as part of the committee papers.
Yes.
So although Michael has circulated it to us, many of us won't have read it in full.
Okay. No, that's helpful, Chair, and I can hopefully answer some of those questions around 22-23 as I talk. So as you mentioned there, we have now provided our completion report for those charged with governance for the 22-23 year. And yes, that was a few days ago, and I think that kind of highlights the speed at which this is still moving. So we weren't expecting that we would be in position to issue that completion report ahead of this committee, but we did just about get there, and appreciate members haven't had potentially full time to read that. So I'll talk around it. If there are questions on the detail of that report, obviously happy to take those as well, and can kind of explain where we're at and what the next month or so looks like in the lead up to that backstop date. So an audit completion report is not a report we have taken to this committee previously, but what it is doing is almost replacing our audit planning report and our audit results report to say that our ISA compliant work to disclaim an audit is now complete, and therefore we're able to issue said completion report. That includes reporting on our value for money, and it includes a value for money commentary for 22-23 within that report. But there are two areas sort of outstanding that mean today we're not quite there in terms of issuing said disclaimed opinion, but certainly will be in advance of the backstop date, and are currently looking at sort of mid to late November. So a good sort of window of time that we think we'll be able to issue that in advance of the December 13th backstop date as it stands for 22-23. So within the completion report, you'll see a draft of our final opinion wording. And I guess that's sort of area number one and caveat number one. That final wording of the opinions, which will be consistent, as Stephen says, sort of across hundreds of authorities, certainly from an EY perspective, but across other firms, I think will be broadly consistent as well. So our wording of that opinion currently sits with our professional practice, so kind of like quality control, if you like, for a final sign off. But that is close, and we're expecting final sign off of that either tomorrow or next week. And then the other area is the issuance of our statement of reasons to close out the objections. And again, we expect that to take place in the next sort of 10 days to 2 weeks. So yeah, no concerns around doing that and closing the objection out this side of a backstop date. That being said, we're then waiting on sort of the final code approval that will then allow us to sign off and issue said disclaimed opinion and kind of draw a line under 2223, noting that, yeah, we haven't completed any substantive work. We are unable to give assurance, and that is what the opinion will say due to lack of resources in advance of the backstop date to do so. The only other thing I was going to sort of remind the committee and bring back is that the audit of the pension fund does sit slightly separately, and that audit is complete and is unaffected by backstop or by disclaimed opinion, I suppose. So that will be an unqualified opinion, and we have previously reported to the committee on that. But again, the timing of that final opinion will sit alongside the county opinion, but will be unqualified as we have finished all of our work in that respect. So yeah, I'll pause there and see if there's any questions, Chair. But yeah, do fully appreciate that the report has only come out in the last few days, so it may take some time to digest.
Thanks, Jacob. Okay, so I'll open now to questions. Michael first, and then Jeff and Chris.
Thanks, Chair. And just a few points of clarity, if I may, through yourself. Just first of all, I'd like to go back to the previous item. The value for money deadline is the 31st of November 2025 for the 2024-25. It's the audit overall opinion and statement that is later on, but the value for money audit opinion is the 30th of November next year. Just coming on to the points that Jacob raised, just want to be really clear with councillors. We have a draft in discussion with officers document that I shared for noting, but that will come forward to the next committee for full public disclosure and discussion. So it is currently a draft document in discussion with officers. That is its status, and that's where that sits. Although it's encouraging to hear from Jacob, the position is moving forward, and the expectation that by the 13th of December, which is before our next committee, that EY hope to have a resolution, albeit disappointing that it's a disclaimer for the reasons that Jacob outlines there. I think there is a need to move forward. As Stephen pointed out, nationally with this position, this will be the case for hundreds of councils of all tiers, unfortunately. But it is good to hear that there are no issues arising at this stage, and one would hope that that remains the same through to the December committee when we will publish this report in full.
Thanks, Michael. Jeff.
Thank you, Chair. Well, of course, I understand that if we've got limited audit being undertaken or no audit undertaken 22-23, you're not going to be able to give any assurances, particularly on opening or for the incoming orders on opening balances. But my question really is, are we going to get on 23-24 audit assurance on closing balances? Because I would have thought that's something that could be done irrespective of the previous audits. You're going to tell me why that may not be possible, but it seems to me that that's something that can be done.
Chair, just before we enable KPMG to come in and answer that direct question, read the 23-24 opinion, one of the things that I would state, and I state this for the record for my professional body, SITFA as well, is clearly there was an understanding that this was highly likely to be the position. And therefore, we must not forget that it is myself that signs off the statement of accounts, and myself that seeks assurances from the finance team that those opening balances and in fact the closing balances are correct. So there is a significant amount of work that I undertake with and through the team to gain confidence to be able to sign off the unaudited accounts, and that should be considered as part of the due diligence of this process. And I think that can't be overlooked nationally as well as locally in terms of the role of the Section 151 officer and the responsibility which I take very seriously in undertaking that exercise, and one would hope that that is forming part of the evidence trail for external audit, but it's probably more than appropriate for external audit to answer in terms of the actual testing and their position in terms of disclaiming again the opinion and how that might then play out over a number of years.
Sarah, do you want to comment on that?
Just as I've started coughing, already. So yes, you are correct that it makes it difficult clearly for us to get comfortable with opening balances, and particularly difficult to get comfortable with the reserves position is the trickiest part. In terms of the closing balance sheet position, we will be undertaking the work that we deem necessary to get comfortable with the closing balance sheet position. We will also be doing work where we can to get comfortable with some of the opening balance sheet position. For example, cash, we can review that back to bank statements and bank confirmations. Having said that, the note that I think Stephen may have circulated from SIPFA is very clear that we will need to issue a disclaimed opinion for FY24. Having said that, I think what's really important is there is going to be a real spectrum of local authorities here. So there will be some local authorities who have had a disclaimed opinion in FY23-24, 22-23, sorry, whose auditors are unable to undertake very much work in 23-24, and therefore the disclaimed opinion reflects the little work that's been done, and it will take that local authority longer to get back to a position of an unmodified audit opinion. Or in the case, I believe, of Cambridgeshire, actually we're able to undertake quite a significant amount of work over the opening balance sheet position, as well as what we can on the opening balance sheet position, and pretty much all we can on the closing balance sheet position. So despite us needing to issue a disclaimed opinion for FY23-24, that means that all of the work that we're doing this year will go a long way to enabling us to get back to a positive position more quickly. And what we would be looking to do is move away from a full disclaimed opinion towards unmodified, and then back to a full unqualified.
Okay.
Not going to enter into technical discussion. Of course, I obviously understand Section 151 officer's position. I suppose probably what we will need to see eventually is the wording of your disclaimer and know what you have done and haven't done.
Absolutely. I think just to manage expectations, though, we have been given a very clear direction from SIPFA, National Audit Office, and the FRC that essentially we will be disclaiming. So what we will do is to warn the disclaimed opinion might look quite stark in terms of what it says, because that's the direction we've been given. However, alongside that, we will provide an annual audit findings report, which will detail the work that we've undertaken and what we've done and how we've concluded over the significant risks. So hopefully that will be helpful for the audit committee. But I did just want to manage that. If you read the audit opinion on its own, it would read as though not a lot of work has been done, and that unfortunately is out of our hands, but we'll do as much as we can in our own report to kind of provide some assurance that we have indeed done lots of work.
Okay, thank you. Michael, final comment.
Yeah, thank you, Chair, for that. In terms of the role of this committee and the importance of that, that's going to be absolutely critical in terms of public confidence in statements of accounts up and down the country, not just here, which is why I made my Section 151 officer comments in terms of the assurance over that, but clearly the questioning and the ability to dive deep into any findings or non-findings, as it may be, from KPMG is important in terms of so where can the public seek its assurance from in those instances. What I will also do is, and it was only published yesterday, the CIPFA bulletin, which I have sent to a couple of members. Bulletin 18 is a very good document that now pulls together all of the guidance from all of the related bodies that have been mentioned, FRC, NAO, as well as CIPFA itself, and sets out in one document now the way forward in terms of the backstop position disclaimers, working out of that disclaimer position, as well as the communication position. So this will be a difficult road in terms of navigating through, but I think the committee has a very important role to play in the coming couple of meetings as it starts to see these and analyse the results from our external auditors.
Thank you. Chris.
Thank you, Chair. I've got three quite separate questions, or two of them are separate, largely resulting from comments which Michael has made, and I'd very much appreciate some elucidation on these matters. First of all, thank you, Michael, for telling me or educating me, assuming I understood you correctly, that there are separate VFM deadlines, backstop dates, separate from the accounts backstop dates. If I understood that correctly, I also understood, if I got it correct, that the VFM backstop dates are earlier than the accounts backstop dates, and you're nodding, so I'm assuming I understood you correctly. That creates some difficulties, I think, potentially, on the basis of what we've experienced in previous years, when dealing in particular with objections from local electors. And we know from painful experience how some of that has dragged on over long periods of time. And I think it's really important that we as a committee recognize the difference between a vexatious objection and a vexatious objector. Now, in my opinion, some objections that we've had have been exactly the same objection relating to a historical matter going back as far as 2015, which has just been made again and again and again every year. And especially given the difficulty we have with the backstop on VFM being as early as it is, I think it's really important that vexatious objections are dealt with really expeditiously by the auditors, and that we give encouragement to them so to do. But that shouldn't apply to the objector, because just because someone has raised objections which we might regard as being vexatious doesn't mean to say that everything they raise in every year may necessarily be vexatious. And we've got to have integrity in the system. So whilst I really would like to see some of these vexatious objections, if they're made, be dealt with very expeditiously indeed, we shouldn't apply the same rules to that objector because he or she, but in this case he may well be raising some new issue which does need to be looked at, and we shouldn't be seen, in fact we should encourage it to be looked at, because that's part of the function which there is within the Act. So that's my first point about objections. Can we make sure that they're dealt with really quickly if they're vexatious, but we don't apply that to the objector?
I think that's a very good point. And Jacob, in your report, you have talked about the difference in how you're dealing with two objections. The first one, you determined that you wouldn't accept the objection for further consideration. And then for the second, you've accepted two of the three heads of objection made for further consideration. So is that an example of how you've dealt with the points that Chris has made?
Potentially not the use of the vexatious term, but yes, we did scope out, I guess, two of the four heads across two objections for different reasons.
Okay, but I think we've gone, Michael.
I think we're all working through these changes in terms of the publications and changes and terminology, so that we'll be required to publish an accountability statement to note the position in terms of the audit and the audit opinion issues. Unless there is a objection that is deemed to be carried on or is being appealed. So on that basis, clearly the decision of an objection, rightly so, under the right process and due process, sits with the external auditors. I can't comment on how an objection point is assessed. That is rightly so for the external auditors to judge. I am aware that a number have been adjudged and a number of being looked at, and some of those are new points. And you're right, therefore, to make the point that we encourage that there is full openness and transparency, and part of that process is not only the auditors, it includes many other streams, including objections, and that has been used effectively over the 100 years or so that's been a possibility. So we certainly want to encourage that and ensure that due process is followed. And therefore, what we would be stating on our website is why we couldn't issue an accountability statement saying that the audit opinion has been finished and closed off because of that. So we would actually be making a comment ourselves as the practitioners, as the owners of the accounts.
Okay.
Happy with the answer to that question. Thank you. My second question is, I've been dealing with this quite a bit in the last few days. I've been down to London with various meetings where this has been discussed. And I'll put it no more than a leading firm of accountants which is involved in public audit in this country, and I'll put it no more, I'm not going to be more specific than that, has put out a statement saying that they anticipate that from 24-25, the recovery of the system will commence. That is the system of local authority audit, with assurance being rebuilt over several subsequent audit cycles before unmodified opinions are able to be issued. Now, that's why the question that Councillor Seiff raised, I thought was a really interesting one about the closing balances for 23-24. And I thought that the answer given by KPMG was even more interesting. The company that I have just quoted from wasn't KPMG. So I'm really interested to hear if there's any expectation at all that 24-25 could be unmodified, or will it be several audit cycles before the overall assurance, forgetting about opening balances, which I agree with Councillor Seiff, could and should and looks as though will be looked at, but will it be several audit cycles before the necessary confidence, the necessary assurance can be given to allow an unmodified opinion? And I know I can't ask you to commit yourself to an opinion in a year or two's time, but in principle, is the comment which was made that several cycles may need to be required for assurance, sufficient assurance to be regained. Does that ring true to you? Oh, through the chair.
Sarah, do you want to answer that?
Yes, is the simple answer. So we are expecting that it will take a number of years to build back to fully unmodified opinion. Yes, and that's a consistent view, I would say, across all the major audit firms that are involved.
Thank you, Chair. I'm really grateful for that, and grateful that there isn't a great deal of disagreement then between the audit companies. I must admit, I wasn't aware of that until yesterday. I wasn't aware that I thought that 23-4 and 24-5, I understood the backstop disclaimer of opinions. I understood all of that. No one had mentioned to me, and I hadn't worked it out for myself, that 25-6, 26-7, 27-8 maybe, and even beyond that, we'll still be having modified audit opinions. And I think it's important that we're aware that this is the case. And Chair, you may well have been aware, but I certainly wasn't.
But I was aware, but I must admit I wasn't clear on how long it would be before we were back to normal. But Michael, you might be able to clarify that.
Yeah, again, through you, Chair. I was conscious yesterday when SITFA Bulletin 18 came out, which is a publicly available document and can be searched. It's the first in your search engine to come up if you search SITFA Bulletin 18. That comes up with a very helpful guide in terms of that progression, and that indicates, and I will have to look to the side, I know it's LARIG, a new acronym for you, which is Local Authority Reset and Recovery Implementation Guidelines. There you go. I didn't have to look to the side. So they are the new terminology. We will need to follow LARIG, and that very clearly sets out that there's an expectation nationally. So it won't apply in every case, but there's an expectation nationally it will take till 26-27 accounts, which are therefore obviously audited by 30th of November 2027, if memory serves me right. And draft publication in June 2027. That is the expected date of the accounts coming back into some form of hopefully clean opinion, and the disclaimers disappearing at that point. But that will be different up and down the country. But I will circulate to members after this meeting, conscious of your reading pack for the entire day for some of you, and for the committee for this afternoon. But that's a very helpful guide and sets out this expectation.
Nick.
I think it would be helpful in terms of communications if we made it clear that the reason for the disclaimed opinion is not as a consequence of anything that the authority has done, but and indeed not as a consequence of what the auditors on the whole have done. It's a consequence of the lack of supply of audit for local government. Because I think someone looking at this from the outside may come to some very incorrect conclusions about how it reflects the overall finances of the authority.
Agreed. Michael, we need to be moving on.
Yeah, I'll be really quick. Yes, having started to look at the EY position, I think that is something that is made clear. Clearly, the KPMG one will then have to take a different opinion in terms of its assessment, but deal with 1 year at a time for 22-23. That is the inference, and I also understand there is a national communications around this as well.
Go on, Chris.
Thank you, Chair. Yeah, well, I did say I had a third question, but first of all, I'd like to completely agree with the comments that Nick just made. And I think it's also important that we get out in our communications. This isn't just a historical matter to do with 22-3 and 23-4. It will affect future years as well, because I think the public we need to get that message really clearly out to the public so that there's no false expectation about the fact, or the supposed fact, that this is a one-stop fix, which is going to fix it immediately. It won't be an immediate fix. The third question I had was to do with the fact, as I understand it, that in certain years, particularly for 24-25, that quite a bit of audit work just won't be done. There'll be a concentration on some audit. Maybe I'm misunderstanding, in which case I look forward to being corrected. But whilst we might prioritise, for example, the work which is done on closing balances, the same amount of work which would normally be done in an audit wouldn't necessarily be done. If that is the case, is there an implication for the fees?
You'll be external auditors.
Yes, so sorry, and it does get confusing with all the different years. Did you refer to 24-25 then?
I did, and I should have said 23-24. My apologies. I was thinking forward.
That is fine. So for 23-24, we will absolutely be undertaking all of the work that we would normally undertake in terms of the closing balance sheet position. But in terms of the reserves position, the P&L, again, in year, we'll be undertaking all of the work we normally would. The challenges that we have is in the opening balance sheet position, and therefore, ordinarily, we would do lots of work over opening balances. We're not able to do that work this year. And I think where you're coming from, and perhaps what you've heard, is there will definitely be some local authorities and some auditors who will be limiting the work very significantly and will possibly be doing very little this year and then building it back up in earnest in future years. To be clear, here at Cambridgeshire, we are intending to do as much work as we are able to do, and the finance team are being extremely cooperative and engaged in allowing us to be able to do that. So whilst from an opening balance sheet position and an opening reserves position, we wouldn't be able to do as much as we normally would, I'd say that here we're probably going further than others may be.
Okay, thank you. Right, let's move on. or rather move back. So I think we're now down to 2016 and 2017 and 2018 fees. And is that the last element that you were going to raise, Stephen?
Yes, and I think compared to the issues of 2023, they're relatively minor, and the report speaks for itself and doesn't touch on the decision that we're asking of committee. Then the last element of the report is the national position, which we've also touched on quite a bit. So I'm happy to leave my input there.
Okay, thank you. So we've had a good debate on this already. Let's move straight to the recommendations. So we're invited to note the report, which we've done, and then to permit the approach to finalisation of the 22-23 accounts as set out in the section 2.2 of the report, and delegate authority to the chair of this committee and the section 151 officer as appropriate to give the necessary approvals on behalf of the council to this effect. Are you all happy with that? Yeah. Okay. Thank you very much. Thank you very much, Stephen. Next item then is the annual report of the Audit and Accounts Committee. And this is the report which I take to the full council in December. So as well as considering the contents of the full report, I just want to agree what perhaps top 3 issues are that I might mention, one of which will be the 2022-23 accounts and the fact that we'll get a disclaimed opinion and it will take several years to get back to normal. Second might be procurement and what the new act and the movement of assets and procurement committee is. And then the third is my usual, if any member has got any issues which he wants internal audit to investigate, then do let me or Mairead know. But Mairead, would you like to introduce the report, and then we'll agree what the top 3 items are as well.
Thank you, Chair. So as you've outlined, this is the annual report to full council outlining the work of the Audit and Accounts Committee over the past year. This document is the draft of that report. It's been drafted in conjunction with key officers who attend this committee, records of committee meetings, and the input of the chair and vice chair. But the key thing is that the report should reflect the input of the committee as a whole, and therefore the draft is shared for your review and for any further amendments, thoughts, or suggestions before it is presented to full council on the 10th of December.
Chris.
Thank you, Chair. This goes back to the comments I made when this report was brought to full council last year. I'm a tiny bit disappointed in reading, when I read through this, that there was very little mention made of the fact, and I think it is to your credit, Chair, that we operate really on a non-partisan way. And whilst there's a short message in there saying that there'd been feedback that we operated in an apolitical manner, I think we should put in something stronger than that, saying that the audit committee does put party politics to one side, and that we do work in the interests of the council as a whole. And it could be said that we'd have a better council if that happened in all committees, but it's particularly important, of course, in the Audit and Accounts Committee. And I think it really is worth stressing more than we have here.
Okay, thank you. And I can certainly mention that point when I present the report. Any other comments?
Sorry, Chair, I wasn't suggesting when you present the report.
No,
I was suggesting as an addition within this report.
No, I agree, but it should be in the report, and it should be one of the items which I do in my introduction. Jeff.
Well, just a minor point. One of the 3 or 4 points that you could mention. First of all, I mean, I obviously agree with Councillor Bowden's sentiments there. I do feel my experience here does indicate that we have worked together very collegiately. But the point I really want to make was that the internal audit team have done a phenomenal amount of work during this, and the number of investigations and audits that they have done and have been in progress is very, very impressive. I'm not sure how they do it in terms of limited capacity. So I'm very impressed, and I think we should draw attention to that when we're presenting our report. I mean, I suppose Mairead hasn't, being modest, hasn't indicated that the good work that's been done, but we can in our report. I mean, of course, the work is listed, but I think we can be more complimentary.
Go on, Chris, sorry.
Sorry, you mentioned a number of things, obviously, which need to be put in, which you mentioned when you introduced this item. But I also think it's worth mentioning the fact that we have exercised our constitutional right to refer matters back to a service committee where we feel it was necessary to bring it to their attention. That was a fairly novel thing for us to do. I don't remember it happening in the previous 8 years within my time in this council. And I think it was a very helpful thing for us to have done, but important to show that we were exercising our proper scrutiny role in highlighting a particular issue which came out of internal audit and making sure that that went back to the service committee for consideration.
Yeah. Okay. Thank you very much. So, but I think overall we're pleased with the report, and we have been asked to consider and comment on the contents of the report, which we have, and I will present it to the full council in December, highlighting the few things that we've talked about. Jolly good. Thank you. So we are now asked to consider the internal audit progress report. Now, this is where we will hear about Mairead's resource issue with her new risk manager.
Thank you, Chair. So this is our regular internal audit progress report, bringing an update on internal audit activity since our previous report to this committee in July. Section 3 shows audit reports that have been finalised, as well as those which have reached draft stage at the time of writing. There is an update on the implementation of global internal audit standards at section 5.5. We have now got more indication of the direction of implementation on that for the UK public sector. So we will continue to bring updates on the approach to ensuring compliance to the next meeting of this committee. At section 6, we bring an update on the audit plan. That includes some amendments to the forward plan, including a reduction of some days, largely to reflect the absence of a corporate risk manager, as mentioned, and some staffing pressures, but also conversely, including the addition of some new areas to the plan, which includes a review against statutory guidance on the best value duty and some work as well on the response to health and safety incidents. At section 7, we have an update on the implementation of audit agreed actions, where we have 79 management actions outstanding. And as usual, full details are provided in Annex B to this report, which sets out all outstanding actions and the current updates that we have on those. Section 7 also notes some audit recommended actions which have not been accepted by the service for consideration by this committee. Section 9 gives our updates on fraud, corruption and whistleblowing. So as requested at the previous meeting of this committee, we are now including summaries of all closed cases, not just those which resulted in a full investigation report or in formal audit recommendations. And then finally, at section 10, we bring an update on the key financial systems. We are still awaiting final responses to enable us to finalise the payroll report. Other than that, the key financial systems reports for 2023 to 24 have all been finalised, and planning has commenced for the 2024 to 25 work, with a plan agreed at the lead authority board on the 23rd of October. That was a whistle-stop tour, so very happy to take questions.
Thank you very much. Just going back to one of the things which Chris mentioned about referring some issues back to service committees. There's the example of the adults business planning audit, where you've only got very limited assurance. So is adults and health going to be made aware of that? And if so, how are you going to do that? Or is it something that we should be following up?
Thanks, Chair. So internal audit, when we issue reports, we issue those to the relevant executive director, usually also copy in Michael as the Section 151 officer. And we report to this committee a high-level overview of outcomes, and then you also have access to the full reports within our document repository, which members of this committee can access. In terms of reporting on to the relevant service committees, internal audit would not do that directly. It is down to the judgment of the executive director to state that they wish to bring that to the committee, or this committee may seek to refer matters, usually if there are overdue actions, etc. But we wouldn't, as a standard matter of process, refer audit reports onto service committees. It would probably overwhelm them with audit reports.
I appreciate that, particularly where you're getting fairly good assessments. But in an example like this, which has got almost the worst assessment, then I would have expected the service committee to be aware of your findings and keeping an eye on what the executive director and his team or her team are doing about the recommendations, even though they've presumably been agreed with you and are being implemented. Any comments, thoughts, Chris?
On that point, Chair, would you suggest that we do refer that matter back then to Adults and Health?
I would personally.
I'd be happy to second that.
Right. Okay. Are you content with the correct comment, Michael?
I think through you, Chair, in terms of the lesson learning and in the exact nature of that point, in terms of the budget saving, what it's drawing attention to is that the early development of plans are in place. So I think it's the robustness of the savings plan, which is part of all committees' development as we go into the January cycle, and will be picked up through the business planning, but as a matter of course. And I think it's the awareness and the drive through that from the executive director in response to questioning in the January committee cycle.
Chair, this is slightly different in that it relates to something which has gone through internal audit and, with all due respect, has been unsatisfactory. So in that respect, it is something which it is perfectly within our power to, as you've suggested, to refer to the committee specifically for the committee's consideration, because I would imagine that very few members of the Adults and Health Committee are actually aware of the situation.
I don't attend every committee. There is a finance monitoring report that draws attention to the matters that were flagged by the internal audit. So that has been presented to the committee. I would need to refer back to the minutes in terms of the recent debate in terms of the level of coverage. And what I was noting is in terms of the development and improvements that are focused, they will be focused around the January committee in terms of the presentation of savings proposals. So I'm not against the referral. What I'm pointing out is in terms of the committee is already aware of the savings position in relation to the recommendation that these relate to.
On Jeff.
Thank you. In terms of the actions that have to be followed up by the various directorates, does the internal audit team go back in and check that those actions have actually been taken place? And the follow-on question is, do you have the resource to do that? I mean, in terms of the ongoing investigations and audits you're already doing, so it's quite difficult to keep the two in balance, I should think.
Yes, so where we have agreed an action which is rated at medium, high or essential, so on the higher end of the spectrum, the internal audit team follow up on the implementation of those actions. So that is what is set out at section 7 of this report. And those actions are not closed purely on the basis of the service advising internal audit that the action has been implemented. A member of the audit team will go in and look at the evidence and assess whether they believe there is sufficient evidence to demonstrate that the action that was proposed has been implemented in a way which is sufficient to mitigate the risk that the action was intended to address. Then on top of that, where we have internal audits which identify particularly concerning issues, we would be looking to reschedule a full audit of that system or service, usually within 1 to 2 years. It depends somewhat on the length of time that the service believes it will take to implement actions, because there is a period where they are implementing and a period where we are following up on that. But we would do a full audit in certain areas, yes.
I ask that is because a lot of the dates for which these actions were meant to have been implemented have been moved on. And what we've got here are to be confirmed or revised target dates. So I just wonder what this process actually does mean, because if they keep on putting it off, it won't get done and you won't be able to follow it up.
Thank you. Can we just go back to this adults audit? I hear what you say, Michael, about the committee should be aware, but I just wonder whether there is a middle way of formally telling the chair and the vice chair of the committee that this audit has been completed and it's come up with limited assurance, and there are a whole series of recommendations which the executive director has undertaken to deliver, so that at least we have formally done our, in my view, done our job in telling the committee about that.
Technically, Chair, that wouldn't be telling the committee, and that's the whole point of this. By us referring it back to the committee, then it gets onto the agenda paper and it is highlighted. And it is, the importance is highlighting the inadequacies which are being reported here. And then the committee, of course, can decide whether to take no further action or whether to do so. But it is the process that we're undergoing here is one which provides that highlighting function. It's not us making any decision, of course. We're not entitled to make any decision on it. It's an adults and health matter, but it does allow the committee to see what internal audit have said, and then for the committee to decide if they need to take any further action or not. And it is then a public process as well. This is public, I know, but it highlights it within the correct committee.
Okay, right. I'm content with that. So is there a mechanism, Michelle?
Yes, in order to refer something back to a committee, you need to propose it, it needs to be seconded, and it needs to be voted on.
Okay, so I am proposing that the whatever it is, Adults Directorate Business Planning Review Audit, which found limited assurance and made a number of recommendations which have been accepted by the executive director, be submitted to the Adults and Health Committee for consideration. Or words to that effect. You can make it. You can make it. And Chris, secondly, are we all in favour of that? There's sort of nods over here. I think that's unanimous. Thank you. That is unanimous. Go on, Chris.
On a separate matter now, I'm really pleased through you, Chair, to see that there are only 3 essential recommendations which are overdue, and even more pleased to see that none of them is actually overdue by more than 12 months. In fact, none of them is technically overdue by more than 6 months, which is a significant improvement on what we have seen previously. On these 3, the first one, the DSG safety valve review, we see that the revised target date for the various actions, that is the data reporting action plan and the inclusion transformation program plan, the revised target date is shown as 31st of October 2024. Now, I appreciate that we do have another 8 or 9 hours left of the day, but I wonder if we can be told if that target date has been achieved yet, and if not, what new target date are we trying to get this done? I understand the importance of it. I also understand the difficulty of it.
I suspect that the announcements from yesterday, which are still to be worked through, have got to be sorted. Michael.
I can confirm that the timetable's been met and it's been achieved.
Okay, right, that's better than I was expecting. So what has been achieved?
We we have submitted a revised plan to the DFE as per the action and the timetable.
But we don't have an answer to what's happening yet because we haven't had the information back from government.
Chair, just to clarify, Michael's absolutely right. The action as presented has been discharged on time, so we resubmitted our revised safety valve plan to the Department for Education. It's then a matter for the Department for Education to seek ministerial consent to the revised plan, and based on previous experience, that timeline can be as elastic as ministers would like.
Chris.
Moreover, Chair, we are not the Service Committee, we're the Audit and Accounts Committee, and the internal audit query has been settled. So that's it as far as we are concerned at this time. I hope it doesn't come before us again in the future, but I fear it may do, but that's something for the future. I said there were 3 items. The third item is one which I've mentioned at assets and procurement, and again at full council I referred to it, and I'm going to be slightly more explicit, and that's to do with Opus People Solutions Limited and our involvement with that. I'm shocked to see that we could not, at least at the time of this report being produced, confirm whether a shareholder agreement and corporate contract with Opus can even be located, either from us or from Opus. And that does concern me. We should be in a strong position to know exactly how we're operating with them. May I explain why I've mentioned this in those 2 other committees, because I think that it's appropriate to say it in the Audit and Accounts Committee. And that is, well, Opus People Solutions Limited produces it's got a very simple modus operandi. It is designed to get the advantage of a large number of large authorities working together in order to get recruitment solutions effectively more cheaply than if we were to try and do them ourselves. And there's plenty of logic in that, and it actually has worked in terms of reducing costs. My concern is this. This was originated by Suffolk County Council, and I must admit I'm now going back 6 years and I'm doing this from memory rather than from any papers. But it goes back more than 6 years, started off with Suffolk County Council, and various local authorities, including ourselves, signed up to this. And one of the means of signing up was to take out a shareholding, and our shareholding is something like 8 or 9%. It's a relatively low figure, but we do have a shareholding in the company. My problem with this 5 or 6 years ago was the apparent position whereby the much larger shareholding which was retained by Suffolk County Council meant that a significant proportion of the savings which were generated by the scheme were going into Suffolk County Council's coffers rather than being shared out reasonably among the shareholders. And whilst I fully accept that if Suffolk County Council originated it all, they should get some return for that, I was concerned that the return in terms of dividends was disproportionate to Suffolk County Council rather than the other smaller shareholders. Now, I never got a satisfactory resolution to that query 4 or 5 years ago, and that is what I'd be really interested to find out now. And that's one of the reasons why I mentioned this company specifically at full council when we were talking about the council making sure that we have better oversight of those companies that we have a financial interest in. So I've made my position, my concern quite clear to you, Chair. I'm not expecting anyone to give an answer here today, but I do hope that the specific query that I've got is noted and that consideration is given by the relevant officers as to whether the situation is equitable. And what completely gobsmacked me, to be quite honest, is we can't even find a shareholder agreement. And that worries me that the query that I had 4 or 5 years ago continues to be a valid one. Thank you, Chair.
I think that's, as you say, that's for noting, unless anybody wants to comment. No. Okay. Thanks, Chris. Any other comments, questions for Mairead? One thing which we have to do, sorry, Mohammed, carry on.
Sure. I just had some questions on the management of consultancy spend. Again, it is a limited assurance piece. For my take of it is we have some sufficient controls around the original onboarding of consultants. But But where we lack some control is kind of reviewing that over time to assess if they're delivering those outcomes, or we've extended beyond the original period, if that still makes sense, and we're getting the value for money from that service. It sounds like a lot of those actions haven't been implemented on the basis of it would take a lot of resource to set up, or we can't capture some of the data to do that. But it wasn't made clear how much of a challenge that was in this report. So I wasn't quite sure if it's just an appetite thing or if it's just insurmountable in terms of doing some of that. I guess my challenge is how going forward, how do we make sure from a committee perspective that we know this remains well controlled if we know some of those actions have been risk accepted and not going to be delivered. It is one thing to go forward. And the other thing is, while actions have been risk accepted, was there something that could have been done that made them more manageable? For example, trying to deliver those actions from a go forward perspective, as opposed to going through everything in the past and filing all the relevant contracts, etc. Just thinking how do we ever improve the risk and control environment here if the answer is always going to be it's too resource intensive or too much data. What was kind of the forward plan for this?
Thanks, Mohammed. Mairead, do you want to comment on that?
Thank you. Yes, I think that's a fair summary of the system. There are controls which are of a sort of preventative nature at the point at which spend on consultants is incurred to enforce the requirements to obtain sufficient approval before a consultant is procured. Where we found more issues was around the second part of the system in terms of ensuring continued compliance once consultants have been procured and are coming into place for things like ensuring payments are linked to outcomes, but also things like completing conflict of interest forms. So currently the control for this really is the consultancy policy, which is directive. So it tells people what they should do. But what we lack is those kind of stronger preventative or detective controls that would stop people from not following the policy or identify where that's not happening. So the recommendations have been rejected due to a lack of resource in the procurement and commercial team, which is probably arguably a place where potentially those controls could sit. From an internal audit perspective, the actions that we were proposing were risk rated medium. So we would see that is an action where audit suggesting action is required to avoid exposure to a risk to the service area. The actual financial materiality of this is not huge. So we're talking about perhaps 1 to 2 million of spend annually, depending on the year. I think that the consultants report, which came to the July meeting of this committee, identified about £750,000 of spend in the final 2 quarters of last year. Equally, consultancy can be an emotive topic, and the council's ability to demonstrate value for money on consultancy spend has been a focus in recent years. So I think there is that need to balance the risk with the cost of introducing a system of control. Our head of procurement and commercial felt that in order to introduce that system of control, actually the price was too high. The costs really would outweigh the benefits. And so we've presented that on a recommendation by recommendation basis to this committee for your awareness and your consideration in terms of understanding the system that we do have in place. I would note that if we were to implement these types of controls for consultancy, that would be above and beyond what we have for other forms of procurement. So it would be a case of putting in additional resource specifically for consultancy that we don't necessarily have elsewhere.
You're content with those explanations, are you, from head of procurement?
I think so. As an auditor, we love a really incredible system of control, but control comes at a cost, and the authority has to balance the extent and materiality of the risk it faces with the cost of controlling that risk.
Stephen.
So at risk of mentioning one of my favourite subjects, culture. So this comes back to the issue for me that whilst Mairead and her team have made perfectly sensible recommendations, if you think about the classic 3 lines of defence model of doers, helpers and checkers, the procurement and commercial team are level 2 helpers. They should not be doing the work of level 1 doers and decision makers. And if we were to offset that by increasing the procurement resource, actually, I think we'd probably find that would make matters worse rather than better from experience, because it drives greater levels of learned dependency or managerial apathy. So I'm very much inclined to support not only our head of procurement and commercials view, but actually the need for level 1 managers taking ownership and grip over these things themselves, and dare I say, being held to account when they don't. Thank you.
Did you hear all that, Mohammed?
Yeah, I
With
did.
those
My
explanations?
only challenge to some of that would be, I guess, in terms of when we agree audit actions, we probably should be having, I'm sure we are, but having those conversations in terms of what's practical, realistic, and mitigates the risk to a reasonable level, so we don't end up in a situation where we're kind of risk accepting later down the line, if that makes sense, would be helpful. And I guess the other thing is, would this still remain on kind of an oversight piece from an audit perspective, where, if we do see material movements in that spend, it might be considered for future audits, for example. But obviously that would have to be dependent on other risks as well. But just to make sure that it's not assumed it's one and done, if that makes sense.
Okay, thank you. Go on, Michael.
Chair, through you, one of the things, so this report was brought to my attention in terms of the sign off, in terms of the response from the head of procurement and commercial, has been flagged to the corporate leadership team, and I will be talking with management and the wider leadership team next week about alternative controls and mitigations that will be brought in, and a number of areas, including this area, and going back to what the Chief Executive just noted in terms of the doers and where that responsibility sits alongside the level of reporting and the expectation on this. So there will be further compensating controls being introduced over the coming week.
Okay, thank you. The other element of your report is always the forward look for your future work. So just scanning down that, it all makes eminent sense. This morning at Strategy and Resources, we heard about the KPIs and the corporate risk register. And mentally, I was just thinking, is everything in the corporate risk register covered either now or previously in your work plan? Is there anything that's missing? Are there any of the key KPIs that we should be picking up and looking at? And we talked specifically about freedom of information requests as an example. Are you confident that you have done that double check and that there is nothing missing that we should be aware of?
Thank you, Chair. It's a really important question. And when we restate the internal audit plan, one of the things we look at for each audit in the plan is what risks does it cover? So which of the key risks on the corporate risk register does it link to? And when we restate the plan, we look to ensure that the restatement retains that balance, so we don't accidentally delete all our safeguarding audits and spend a huge amount of time on financial governance but miss the safeguarding risk, for example. So that's something that I would say I'm confident that we do have coverage of our key areas. That coverage is probably best expressed over a longer term than 12 months. There are some risks where one or two specific audits provide us with a great deal of assurance. Probably the most obvious one is the climate change audit, which we completed, I think at the start of this year, perhaps late last year. So it's unlikely that we will do any further work focused specifically on climate change until the end of this current financial year. But we do have that wider coverage. And then in terms of key performance indicators, we have a review which is part of the core audit plan. So the part of the plan that doesn't change from year to year, which includes a look at a sample of key performance indicators. The new performance framework, which was approved this morning at Strategy, Resources and Performance Committee, does also include a requirement that the governance and performance team will be conducting their own audits on a rolling basis. So one of the things that we will look at is not just looking at a sample of indicators ourselves, as we have done for a number of years, but looking at the processes that they've put in place to obtain their own assurance, and considering how effectively that will work going forwards, and whether that's an area that perhaps we will then be able to have a lighter touch on coverage in future. But yes, we definitely try to cover both.
Okay, thank you very much. No comments from anybody else? No, we have considered and commented on the content of your report. Thank you. The next item is the corporate risk register, which again was considered by the Strategy, Resources and Performance meeting committee this morning. That committee is responsible for discussing the numbers. We're responsible for confirming that the processes are in place to manage risk adequately. Mairead, do you want to just highlight the key points that we should be aware of?
Thank you, Chair, and apologies to those of you who are hearing this for the second time today. This is our regular report on the corporate risk register and a risk management update. It's the exact same report that was taken this morning to Strategy, Resources and Performance Committee. So the full corporate risk register can be found at Appendix 1 to the report, and an overview of the residual risk scores is provided at Table 1. The key change from the previous report that you saw in July is that the score for risk 3, the risk that the council does not have enough budget to deliver agreed short and medium term corporate objectives, has increased from a score of 12 in June to a score of 16 in October, which is above the council's risk appetite. The details for this change in risk score are provided at sections 2.2.2 to 4 of the report. The key reason being due to the expected end of the statutory override in the accounting treatment of deficits within the dedicated schools grant high needs block funding. I also note to the committee that risk 5, which was previously called the risk of failure of corporate governance, has been retitled to the risk of serious failure of corporate governance, with the intention of that change just reflecting that the focus of the risk is on governance issues which have the potential to have a serious impact on the organisation. The remainder of the report provides some information on risk management activity, the implementation of the corporate risk strategy, and just to note, as the Chair has touched on, unfortunately, while the report notes we had successfully appointed to the post of corporate risk manager, unfortunately that candidate has withdrawn, so we are out to advert currently for that post. Thank you.
Thank you, Jeff.
Thank you, Chair. Well, a general comment on risk 3, and it is just a comment. I'm not sure we can do anything about it, but perhaps our Chief Executive can tell us whether he thinks there's going to be an impact on our finances as a result of increased national insurance pension, contributions, employers' national insurance contributions, which will go up from January. That's not this year's problem, but it will impact on finances. But that's just a... Sorry.
To interrupt you, Councillor Steve. Am I correct in thinking that our function here is to make sure that the process is correct about the risk register, whereas the debate about the content of it is really for other committees in this particular one, Strategy, Resources and Performance?
No, exactly. And that's what I was trying to say in my introduction.
All right. I take it back.
So take that back, Jeff.
I take it back.
We would have put you in your place anyway.
Thank you. But I do have a specific question on...
So you can ask questions about the management framework, the work mechanism that has been used, but not the individual.
Well, I wanted to ask a question about mitigations that we may be on, may not have in place for items 1 and 2. One is certainly in the case of social care and so forth. I did actually ask this at Adult and Health Committee, and it was going to be looked into. And it's simply partly because I don't know exactly how we're organised for social care. So obviously we have some of our own staff, but I believe we use agency staff, and I don't know whether we use freelancers. But it's come to my attention that people operating independently in the social care sector, including people who perhaps provide mental health support or therapy, have been asked by their insurance companies to increase the level of their professional indemnity insurances. I'm not quite sure why that increase has been asked at this time, but it's a very significant increase. And I just wonder whether we, as a council, actually ask or have in place professional indemnities for, particularly from those outside, operating independently outside the council's workforce. I assume that the council's workforce is covered by our own insurances or self-insurance.
Yeah.
And that would apply also to children's care as well.
Okay. I can be corrected here, but I think that question is an issue for the relevant service committee, so
Okay.
adults and health, where you have already raised it, rather than
It affects
here,
the risk
which is
rating, though, wouldn't it?
an issue related to the risk management and the way in which risks are assessed. Is that correct? Yes.
All right.
Chris.
Thank you, Chair. I thought Councillor Seif's second question was really an interesting one, because if I may be so bold as to rephrase it, he was asking whether there are additional controls, he called mitigations, which could have been put in place for risk 1 and risk 2. And that is more appropriate for us to talk about in principle. Now, my apologies that the majority of the people sitting around this table also heard what I'm about to say this morning, and I'll really be as brief as I can be, but it is relevant to this committee, so that's why I'm saying it in this committee. I was concerned in risk 3 that that is, the council does not have enough budget to deliver agreed short and medium-term corporate objectives, that all 19, I think it was 17 or 19, all 19 controls were about the budget, and nothing was about the other side of the imbalanced equation, which is the agreed short and medium-term corporate objectives. And the chief executive, if I may be so bold as to summarise what I believe he said, agreed that it was a legitimate issue to put onto a risk register. We as councillors have responsibility. We own ultimately the risk policy, the risk appetite policy. It's our ownership, and it's for us to determine that as councillors. We are guided by officers. In this case, the risk going up from the officer point of view is Michael Hudson, which is absolutely fine. But that doesn't take away our responsibility for it overall. And my concern, Chair, is, without rehashing everything that was said this morning, because there's no need to, I'm not sure that we have a mechanism very easily to challenge what is in the risk register, and particularly the controls which there may be, or the action plans. And I'm not confident that we really have a mechanism to have effective input into that. We shouldn't just rely on officers all of the time. We've got an overall responsibility. I'm not quite sure how it should be done or could be done. You saw what I did this morning, and the chief executive is taking it away, and I'm very happy with that. But I'm just concerned that we aren't able to fulfill our role as effectively as we should, because there's no specific mechanism to allow us to do that.
Okay. The chief executive is going to take away the specific issue about the various actions or controls. Is there anything generic about the role of this committee in influencing the contents of the document, the way it's set out, that we should add in or record? Stephen.
So my immediate reaction, Chair, is in part to agree with Councillor Bowden. The primary responsibility rests in terms of the contents of the policy and the framework that members ultimately are accountable for. If we need to look at that further, obviously we have the annual review that we undertake, and it may be that we can look at practice in other authorities through the work of the Director of Legal and Governance and her team, supported by Mairead. I don't have an immediate reaction to that, so I would probably suggest it's something we take away and explore and provide an update outside the meeting to members in writing. Thank you.
Okay, well, if we can just record that, we'll bring it back as our action for next time. Okay, otherwise, David.
Yep, thank you, Chair. Page 147, item 3.1.3, a property database risks. Just asked, there's a review taking place to consider the extent of properties going onto this corporate risk database. I wonder what the timescale is, please, when we expect to have that completed or updated.
Are we able to answer that about the dates, Michael?
I will follow up in writing, Chair. I think they have all now been actioned, but I will follow up in writing.
Did you get that, Michelle? Okay, thank you. All right, so no other comments. So we have noted the corporate risk register, and we've made a number of comments. Now we've got 3 other items. We started at 4:15. Are you comfortable that we aim to finish at 4:15? We started at 2:15. Are you comfortable with the aim to finish at 4:15? Which means, Tom, you will need to be quick. So the next item is debt management and the debt management update report for October 24. Can I ask Tom Kelly, Service Director, Finance and Procurement, to introduce the report, please?
Thank you, Chair. I've also got Alison Balcom, who's Head of Finance Operations, alongside me. This is the debt management monitoring report, which the committee receives on a periodic basis. The headline position is a heightened level of debt, and we'll explain some of that analytical position beneath that and why the progress that's being made, particularly through the debt improvement project, jointly overseen by myself and Kirsten Clark, the Service Director for Adult Social Care. Just take the committee, first of all, to page 185, and the middle of that page. You'll see actually the subtotal before we get to the NHS breakdown. Both the comparison position for the last year, so quite an increase in the headline level of debt. So the current month at 26.3 million compared to 21.9 a year ago. But just to draw a couple of things out, then there has been that deterioration on the position 1 year ago. But a couple of positives. Firstly, the unapplied amounts have decreased. And we are seeing also a month-on-month improvement compared to earlier in the year. Much of the changes in the adult social care position, and taking the committee through to page 187. It's important to stress, first of all, that this adult social care debt is, of course, the most complex area of debt that the council manages. We're working with vulnerable clients, and often their financial affairs take a secondary position to their care needs. There are complex issues, as the report outlines, in relation sometimes to dealing with estates or probate matters, and in terms of their capacity, to whether they've got capacity to manage their own financial affairs. You'll see on page 187, there is that upward trajectory in the level of amounts that we're billing for social care. In many ways, that's very good news for the council. More income collected, greater client contributions. And in the first half of this year, billing up 5.5 million compared to the first half of last year. So a lot of what we're seeing in terms of increased debt numbers is that reflecting through. The other thing we're seeing in this area is there's been a reduction in the financial assessment backlog, so how quickly social care colleagues assess clients. That increased performance in that area does bring us a challenge further down the pathway in terms of collecting that debt, and often that backdated correction makes debt harder to collect in the longer term. So moving quickly on, page 188, you've got kind of our forecast position through to the end of the next financial year. The kind of do nothing position, because of that increased billing, would see our debt levels rise up to 28.1 million. What we're targeting is not necessarily a reduction in our over level of debt, because we're constantly billing new amounts. So the orange line there in the middle, the target being 22.4 million, broadly stable across the period, and how we're tracking against that in the shorter line in the middle there at 21.6 at the moment. So slightly behind track, and we're looking at the variations that will bring that back in line. A couple more things to mention. So firstly, collection performance on page 191, and also comparing the position of debt that was outstanding at the beginning of the year. These are, I think, encouraging. So high levels of collection, up above 90%. You'll see on page 191, and then probably quite a lot of focus on page 192 onwards in terms of the initiatives we're taking through the debt management improvement project currently. I won't go through all of the examples, but they range between workforce-led changes and digital-led changes. So, for instance, on the system and digital side, apologies, using the Halo system for communication between different council departments, increased use of paperless direct debit. We're increasingly looking at how we can use alternative methods from post to communicate with clients and an improvement in those statistics. Lots of focus on the management of the debt team, and there's a statistic there about the 59% increase in the number of actions by the debt team each month. The guidance, the standards that we apply, and the way that work is divided up in the debt team has been a big part of that review. And we also talk about the more detailed focus on particular categories of adult social care debt, whether that's for court of protection and capacity, or cases where clients are deceased. Another initiative, for instance, we've used or intending to make more use of a recovery agent with particular expertise in the adult social care field. I should also just briefly mention the NHS position, as that has been quite a standout kind of feature of our debt management. I think the main message here is there has been recent progress. So £17 million of that position has been cleared in recent months. Still a significant amount to deal with, and that's now focused our kind of the amount outstanding is on the disputed amount with the NHS, and that connects up to complex changes we're currently going through in terms of changing the learning disability partnership. So that will mean that the way health contributions are collected in the LDP will be different in future. So overall, Chair, a challenging picture. Good news in terms of more money being billed by the council, seeing progress with that historically, and quite a number of improvements across the piece to try and manage and maintain that position.
Thank you, Tom. Any comments, Jeff?
Chair, I'm a bit nervous about asking this question. I may be out of order again, but it directly concerns a matter I have an interest in, not a personal interest. But presumably there's a fair amount of write-offs from our debt position. And I just wonder what the process is and how it gets reported. And does it go back to the committees affected, the chairs, or what is the process?
Thank you. Yeah, it's a good question. There's a very formal process for debt write-off, so that accords with the scheme of financial management. So up to £10,000 per year, the relevant head of service can write off that amount. Up to 25k, it's Michael's authority is the section 151, and then amounts above 25k have to go to committee before they can be written off. And indeed, there were some matters at SR&P committee this morning doing that. There's a documented kind of pro forma and process that's followed for each of those material write-offs above 5k that sets out a recommendation from officers in the debt team about why it would be no longer economic to pursue. So as part of this plan, we are expecting more write-offs this year, and that will be part of what reduces the debt. And we only write off where the council is owed funds and is making the concession that it will concede. There is also a level of correction that we see, particularly in adult social care debt, and we don't treat that as a write-off where the council has made an error in the first place or where more information has become available. And that quite often happens with adult social care, that people are assessed provisionally, they start making a charge, and then that either brings their engagement or more information comes forward, and we can update and correct their contribution.
Okay, anything else? Go on, Chris.
Thank you. This is a paper I always look forward to. Well, I sometimes fear what's going to be inside it, but I look forward to the analysis of it and seeing what's happening. And the first thing I have to do is to recognise the work which has actually been done over the last 6 months and beyond in terms of attempting to address some of the issues that we've got here. But overall, it has to be said that if you're just looking at the picture as it stands, it really isn't very good and it needs to be better. And I think improvement really is required. In table 2.2, paragraph 2.2, you've got the table which is called overall age debt position. Well, that's not an age debt. It's just showing what the amount was, which was due or overdue at any particular time, current month, previous month, and last year. It confused me quite a bit. In terms of having an aged debt position, that is knowing how much is overdue, 0 to 30, 31 days, 32 days to 60, and so on up to 730 days plus. In terms of that, we don't get that analysis by directorate. And I'd certainly be interested in seeing that, because I think that would highlight, I think I know what it will highlight. It will highlight that the major problems we've got are in adults, health and commissioning. But nevertheless, that sort of analysis, I think, would be quite useful. And we do get that information as a whole for all of the council's debt in the table on paragraph 2.6, the on ASC at least, the ASC overall age debt by debt status. And that is certainly interesting and informative. We don't get that information elsewhere. Now, as far as ASC debt is concerned, I don't fully understand the crediting method which is used to make adjustments. And I think it would actually be very, given the amount of money which is involved in this, and the pain which is caused to individuals in getting through the system and getting to the stage of getting corrections, I think it would be really interesting at some stage in the future, Chair, if that process could be explained to us in terms of how it affects the accounts. Not in terms of the adults and health side, that's not our business, but in terms of how it affects the accounts and the timing of it, I think that would be very interesting. Because looking at that ASC overall aged debt, a number of things struck me. The first thing is, I'm sorry to say, as an old accountant, the first thing I do is to check that the numbers actually cast and cross-cast, and this didn't. So I had to start investigating. Well, why doesn't it cross-cast? And it's because of the pre-Dunning. The vast majority of the pre-Dunning cycle is not included in the individual period analysis, but it is in the grand total. And I'd just be grateful if we could reformat this so it casts and cross-casts. Something just over £3 million of pre-Dunning money is in the grand total, but isn't in any individual month. So that would be helpful. But looking at this, some things immediately struck me. You've got £3.3 million worth of debt awaiting a service response. Now, there'll always be matters which are awaiting a service response. But when you see that of that 3.3 million, you've got 422,000, which is between 1 and 2 years old. And you've got 539,000, which is more than 2 years old. You have to suspect they might have been awaiting a service response for a rather long time. And I just worry that there may not be a sufficient priority given in the service departments in order to satisfy the queries that accounts raise in order to try and resolve the situations which exist. Now, I'm just reading between the lines here, but that's what it looks like as far as I'm concerned. I see the amount of pending write-off and the amount of legal action ongoing, and my attention was immediately attracted to this, as I think Councillor Seif was saying. It really is an interesting point. But the fact that we've got legal action ongoing of £1.3 million as far as this, just as far as ASC debt is concerned, forget about all the rest of the debt. It does make me worried about just how much, a significant amount of that, no doubt, will end up being provided for before it is written off. And that's going to have some significant impact on our overall figures, unless we are assuming always in each year's budget that we will have a significant amount of provisional write-off every single year of debt, which is itself a rather worrying thing to put into a budget. I'll leave the detail on that there. I've raised enough points. But on the NHS debt, we such a large amount of money owed, and I see that some action has been, some money has actually been received post these numbers, which is of course welcome, but we shouldn't allow them to get away with this. They are the ones who were guilty here of breaking down the partnership. They're the ones who are actually responsible for failing to pay us. And I am just concerned, as we had a year or two ago, that are we really being robust enough with our partners on this to ensure that the monies which are due to us are paid quickly. They wouldn't put up with it if it were the other way around, I'm sure. And I'm just concerned whether we are being as robust as we could be. Thank you, Chair.
Okay, thank you. Alison or Tom, do you want to address those points, and then I'll come to Mohammed? And I'm conscious of the time.
Thank you. So, certainly we can provide a further kind of age breakdown by directorate, and grateful for Councillor Bowden's feedback on the casting. We'll look to ensure that's picked up as well. I think that the awaiting service response category is a broad one. That figure is moving in the right direction. Often that will relate to where there are financial assessment queries, so more exactly that effect I was talking about in terms of more information coming forward from individual clients. But we absolutely recognise there is a lot more work to do in this project. I think we're probably about 6 months into an 18-month, 2-year kind of turnaround of the position. And when I say turnaround, that's probably stabilising at a new normal rather than seeing a complete drop off of that level of debt. On NHS, I know our partners do watch closely what we're saying in public forum, and then important to emphasise we do really welcome that there has been progress in terms of that payment. Everyone thinks they're in a kind of strong position, but we are absolutely taking a robust approach, and there is engagement of all of the avenues, including the legal and contractual avenues that are open to the council in terms of ensuring those obligations are met.
Thank you, Stephen.
Thank you, Chair. I think I'll just supplement what Tom said and respond to the precise question from Councillor Bowden about are we being robust enough? Tom's right to make the point that we have a duty to work closely with our partners, particularly in the NHS, and it's clearly important we do that well, especially where that's for the benefit of patient outcomes and our service users across the county. However, that also has to be backed up by the appropriate and fair sharing of cost and resource between both ourselves and the NHS. And yes, I think I can just reassure members that where that is not happening, we are taking the appropriate necessary steps. But at the same time, we also want to recognise that there is a great deal of very positive work underway with the NHS, particularly in terms of service provision to patients and service users across the county, and especially at operational levels with the integrated neighbourhood teams. So I guess in response to Councillor Bowden's point, I would say good partnership relationships are ones in which you can agree to disagree and you can move forward. And sometimes we have to recognise that win-win is not always the best outcome. So on this occasion, I'm confident we're taking all the steps we need to take, both to protect the county council, but also to make sure that we have a tenable relationship with the NHS moving forward. Thank you.
Thank you. Mohammed.
Yeah, thank you. I'll make it brief. So just a couple of points. Do we have any SLAs that track and monitor the level of charges occurring versus the time taken to bill? Because there's a graph there which shows the overall billable, and you can see that's going up, but that doesn't necessarily mean that relates to the latest debt. It could be a back book that we're kind of billing upon. So just to make sure that we're chasing new debt as fast as possible, do we track that from kind of an MI perspective? Other point is, are we able to break down that debt balance between what is actionable and something that we can do something about versus where we have a blocker and we need something else to happen before we can action it? And then the final bit is the implementation and actions that have happened. I couldn't quite get a sense of what's happened versus what's going to happen, as is all kind of consolidated into one piece. And therefore, I couldn't get a read of that financial modelling analysis with improvements. Does that mean all those things in that section have happened and that's what would happen on that basis?
Tom, can you help with those things?
Yes, I think they're very pertinent points. There is one metric that we do provide on page 192 around the reduction in the financial assessment backlog. So previously over 1,000 cases in that waiting list, down to 64 at one point in September. So that is indicative or a proxy for saying there is much lower wait time for that initial financial assessment. In terms of how quickly we're chasing up billing in the dunning cycle, I think the big risk is in the 360-day plus category, and that's where we're intending to perhaps focus attention, but we do have a wealth of data on this information, on this position now, particularly in more recent months. So we'll have a look at Mohammed's query there in a bit more detail. And yes, we've attempted to summarise the information here, but I take the point that there's a mixture of things that have been implemented and are in progress. Again, that's we've got kind of program management governance around this, so that is split out. So we could provide something further on that to the committee if helpful.
Perfect. Thank you.
Okay. Sorry, go on, Mohammed.
This is fine. Thank you.
Thanks very much. I think that's all. So we have noted the actions and approach being taken to manage income collection and debt recovery. Amongst the things we've noted is our discomfort with the NHS and the fact that we're not recovering everything as quickly as we'd like from them, that many of the debts are extremely old and we need to recover those quickly, but that we have acknowledged that there is a lot of improvement work being undertaken by the team, which we commend. Okay, thank you very much. Last couple of things. The annual whistleblowing report. Mairead, do you want to introduce this item? Sorry. Beg your pardon. I'm required, according to the Constitution, to have a break. That's quite right too. There was I thinking we'll just finish, but we will have a break. So if we come back at 4:30-ish, 4:30-ish, that'll be good. Thank you very much. So for the people watching from home, we will restart the meeting at about 4:30. Thank you. That's all right. Right, it's 4:30, folks. Let's press on with the last couple of items in this audit and accounts committee meeting. We're on to the whistleblowing policy, Mairead. Whistleblowing report.
Thank you very much, Chair. This is the annual whistleblowing report for 2023 to 24. Members of the committee may have deja vu, as we had the previous annual report for 2022 to 23 only in March. That was delayed due to the Protect benchmarking exercise. We're now back on track for these to be completed once a year in the autumn. So the report highlights the outcomes of the annual whistleblowing survey we conduct with staff at section 3.1. At section 3.2, we have information on publicity and awareness raising around whistleblowing. The key point there is that we have just released the new whistleblowing and anti-fraud e-learning, which has been designated as essential learning for all officers. It's available now on the Learning and Development portal. And we've also brought an update on progress with the whistleblowing action plan, which came from the Protect benchmarking review at section 3.5. Section 3.3 gives some information on whistleblowing referrals received through our centralised corporate whistleblowing process in the 2023-4 financial year. We're still seeing an increase in cases year on year. Previously, we were seeing around 20 cases a year. Last year, it was 34, and we are on track for a similar number as well in the current financial year. The key element of the report is the update to the whistleblowing policy, which we've completed, and that's taken into account the Protect benchmarking exercise. It's also had input from colleagues in HR, information governance, and we've taken it to the unions as well for their input. So you can find a copy of the updated policy at Annex A and a copy showing changes from the previous version at Annex B. The key things to highlight are the introduction of the role of the whistleblowing champion, which aligns with Protect guidance, greater information on distinguishing between confidentiality and anonymity in the whistleblowing process, and giving some more information on how freedom of information requests relating to whistleblowing cases will be dealt with, as we've seen an increase in FOI requests around whistleblowing cases sort of over the past 6 months or so. So, as ever, happy to take any questions.
Okay, thank you very much. I thought this was really clear and very helpful.
Yeah, I'm conscious of time,
go on, Jeff.
but I can't forbear but to ask, if as a result, and it may be that it's covered by the table, there's never know what page it is. Anyway, I'll ask the question and I'll look at the table if we can't find it. As a result of whistleblowing and people drawing attention to a problem, has it resulted in any system changes, things that have not been picked up by internal control or other processes, which then would there is a resultant change in either policy or control systems? I'm assuming it has, but.
Thank you. It's a great question. So table 6 in the report gives a very high level summary of outcomes from whistleblowing referrals. And the key one for answering this is probably the 4th line down shows the number of cases per year that result in informal audit advice and recommendations. So that's where we don't think there's a really serious issue, but we engage with the service to say, actually, you may want to think about doing things differently. And then 2 lines down from that, audit report and recommendations. So if internal audit, as a result of looking into a whistleblowing, identify areas where we believe a formal recommendation needs to be made, and that recommendation should be followed up through our normal audit action follow-up process, which comes to this committee, those cases would fall within that line. And as you can see over the years, it's rather variable as to what proportion of whistleblowing cases result in that kind of formal recommendation being made, but it's certainly something that is an outcome of the process. Yeah.
Chris.
Thank you, Chair. First of all, may I say that I think this report is the most blunt and honest report that I've ever seen in any local authority coming out on a subject. I've never seen the worst ones, fortunately. I've never been a member of one of the worst local authorities. But some parts of this could easily have been sugar-coated or quietly pushed to one side, and they weren't. an honest report is in front of us. And I say that, I know the Chief Executive probably knows exactly what I'm going to say. It was disappointing that so few employees responded to the survey which was put out. But that survey must cause concern about the culture which we are being told exists, at least within part of the authority and at least in relation to whistleblowing. The first thing, which is paragraph 3.17, the fact that 13.5% of employees confirmed they'd thought about using the whistleblowing policy in the last 12 months, compared with just 2% last year and an average of 5% over the last 5 years. That in itself seems to be some sort of warning sign. It could always be statistical noise, but nevertheless, it shook me when I saw those numbers. And then when you see some of the individual comments made by people about why they didn't make the referral, why they didn't use the policy, I don't want to put myself in trouble. Fear. Senior members of staff have consistently addressed the issues I've raised, unsure of how the issue would be raised. And the people who will receive the issues are the main perpetrators of bullying in the council. There is no way to truly raise a complaint. Those are awful comments to make. I'm pleased that they're put in because they highlight it to us. And I don't know how to change the culture in order to convince those individuals that the situation isn't as they are saying. But I think it's really important that we don't ignore what they're saying and that we try to find ways of addressing those sorts of comments. Later on in the report, they made other comments. Issues with staff members are never dealt with. Some examples of issues have been dragged out for far too long and concerns aren't dealt with quickly enough. And one which worried me, when I raised a concern about health and safety, nothing has been done, so I do wonder if it's worth the paper it's written on. These narratives, which we can only assume are honest narratives, are really worrying. I need more reassurance that my identity is safe. Now, I don't have an answer. I'm not an HR expert, far from it. But these comments must raise questions about the culture which exists. And I hope that those with more skill, knowledge, and experience than me can find ways to address these, what I would regard them as almost cries for help. These people who are saying they don't have confidence in our whistleblowing system and clearly aren't happy as employees in terms of any complaints they have.
Thank you, Chair, and thank you to Councillor Bowden for the comments. Before I come on to the main substance of what Councillor Bowden has said, I would just make the point that when I saw the draft report, I purposefully said to Mairead, it goes in unvarnished, unchanged, and it has to be fair, open and transparent. Because actually, to the second part of Councillor Bowden's question, if we don't share these types of statements and we don't surface them honestly, then how can people have any confidence that things are going to change if we're not prepared to actually hold up the mirror to ourselves as an organisation? So while some of those statements are painful to read, some of those statements are obviously deeply concerning to read, I am also mindful that there are other examples of positive experiences. Unfortunately, the statistics are the statistics, but the individual concerns and comments are obviously deeply troubling. I don't want to denigrate the importance of those comments, but they are not dissimilar to what I've seen in other public sector bodies, sadly. And in terms of the overall culture of the organisation, what I can say is that's something that continues to attract a huge amount of attention from me personally, from all of our corporate leadership team members, and continues to be something that we try to seek to improve on an ongoing basis across the whole organisation. It might interest members to know that, for example, yesterday, this is only Thursday, or it is still Thursday, isn't it? Yesterday, when I held our all-staff Cambridgeshire conversation, which is a live event on Teams every fortnight, there were over 360 individuals joining that live. They're recorded so others can see it. There were comments raised in the chat bar around some managerial behaviours in parts of the council. I took it as positive that the individual was willing to raise those comments, and they've subsequently already been picked up and actioned, because it was about behaviours in terms of mandating amounts of time for people having to be in the office during the working week, which is actually completely contrary to this council's policy. So those have been addressed. I think what we have to do, back to the fundamental premise, is continue to be open about these issues, continue to show we're dealing with them, and in many ways, by being able to share a report like this with our staff, we get to start to help them see that things are changing. The reality is, in terms of any shift like this, having had to address similar issues in the NHS nationally, it's a matter of taking time, of taking care, of taking attention, and very sadly, because of the nature of the concerns, we don't often get to talk about successful outcomes because, of course, people's confidentiality and anonymity needs to be protected. So I think, Councillor Bowden, there's nothing in what you've said that I don't agree with. I think it's just also recognise that we do take this seriously. We are working at it, and it's a job that's never completed in my experience. Thank you.
Thank you, Chair. I do welcome the comments from the Chief Executive. Establishing trust is the key part to all of this. And I think that what the Chief Executive has just said, and being open to staff as far as something like this report is concerned, being open and honest and showing that we are listening to what staff are saying is the essential first step. So I can't disagree with anything that the Chief Executive said about the way of moving forwards on this. It will never be 100% perfect. Unfortunately, these things never are. But recognising that there is an issue and taking steps to try to sort that issue out are obviously the right things to do. And ultimately, if you are open with people, if you are honest with people, you eventually establish trust.
I think it's worth remembering.
You carry on.
Yeah, I think it's worth remembering that this policy arose when it became clear from the events of the Farmgate incident that the existing whistleblowing policy was not fit for purpose. So I think it is a very significant improvement to when we first arrived here. But obviously it needs continued evolution to make sure it continues to be fit for purpose.
Thank you, Chair. And one of the things, apologies, I didn't say in reference to Councillor Bowden's point, and one of the reasons that I'm very pleased with what Mairead has brought forward is, as you will see, I have been indicated to become the whistleblowing champion for the organisation as part of the policy change, and I think that's the only appropriate answer in the circumstances, because the other officers report into me ultimately, and most importantly, that's to give confidence and assurance to members of staff who do come forward that we will deal with these issues seriously and properly. It is challenging, but it's also the right thing to do. Thank you.
Any other comments? I was pleased with the actions on page 202, which, as mentioned, includes designating a whistleblowing champion, and then there's various other things which are show how this will be rolled out to other people, which I think makes sense. Okay, so thank you for that. We have noted the report and we approve the updated whistleblowing policy at Annex A. Our final item is the committee agenda plan, and can I ask Michelle to provide any updates to the agenda plan, please?
Chair, I have no updates to the agenda plan.
The only thing which occurred to me, if I can get to it, is the risk register seems to be on a couple of times. I wasn't clear whether that's right or wrong. Corporate risk register is on in January and in March, and it's supposed to be on biannually. And is that too often? And will that tie in with reviews by CLT/SRP?
So it should be on for March for a corporate risk register, then the summer meeting, usually July, for the annual risk report, and then an autumn meeting for another corporate risk register update.
So probably not on the January one. Okay, but as that's within your control, we can decide when it comes to us. All right, and obviously the other element which we will need to sign off in advance are the annual accounts for 2002-3 and the EY report. Okay, Chris.
Thank you, Chair. Similarly, the biannual debt management update is shown both in the January and the March meeting. And I'm assuming that the March one is the right one to have, given that we've just been talking about it now. But I wondered, given that we've got it in there for January as well, could that slot be used for the report which I requested about the way in which adjustments are made on ASC outstanding debt? Because I think that would be a really interesting bit of information to understand on an amount of debt, which is really quite a large amount of debt that we've got. And once we see that, it may well be something that we'll like to send to Adults and Health to show them what's going on.
I think that's a good idea. And the other thing which you requested was the age for the different types of services as well, which we could also get in January, if that fitted with the relevant people, with Tom and Alison. And then the final thing was the Executive Director Assurance Report to be confirmed. Do we have any views on which directorate we would like to speak to first? Stephen.
Chair, I think in discussion with Mairead, and this might be somewhat timely given the other items you've suggested would be coming to committee, the Executive Director of Adults Health and Commissioning was, from memory, intended to be the first.
That was going to be my suggestions if you hadn't made it already. So are you comfortable that you will invite him to come? Good. Any other points from that? No, thank you very much. So that concludes the discussion on the agenda plan and also the end of the meeting. It doesn't include anything about training, though. Should we be talking about training?
Possibly the electoral cycle is such that it may be appropriate for that to be thought about from after May.
That sounds like a good solution to that. Okay, right. Thank you very much. That concludes the meeting today then. Thank you.